Hi, this is Lara at Elliott Wave Stock Market with your daily analysis for Monday 23rd of June, recording the video 6:40 PM Eastern Standard Time. I was expecting downwards movement for Monday. We do have a red candlestick, but it's the tiniest little red doji. Price really is mostly moving sideways. I'm still expecting it's likely we've had an intermediate degree trend change, and I'm expecting from this point about 5 weeks of downwards movement to find support at the lower aqua blue trend line on my daily chart. The main wave count is bullish because we should always assume that the trend remains the same until proven otherwise, so I am assuming that the S&P remains in a bull market while price remains above this maroon trend line. For this wave count, the bull market began at the end of the credit crunch at 666.79 for a cycle degree fifth wave. Within cycle wave 5, primary waves 1 and 2 are complete, and within primary 3, intermediate wave 1 has probably ended here. Within intermediate wave 1, minor wave 3 is over a year in duration and less than 1 point off 2.618 the length of minor 1. Minor wave 3 corresponds in its middle to the strongest upward momentum, and the subdivisions fit perfectly, so I don't want to label the end of the third wave as anywhere other than this point here. That means the fourth wave ends here, and this is where the fifth wave begins. The fifth wave has two possible structures. It could be an impulse or an ending diagonal, and because this wave, and especially this wave, subdivide very nicely as zigzags, I expect the structure is a diagonal, which should now be complete. Ending diagonals require these subwaves to all subdivide as A, B, C zigzags, so I'm labelling it a zigzag for 1, and 2, and 3 is shorter than 1, and 4 is shorter than 2, and it overlaps into first wave price territory as it should for a fourth wave of a diagonal, and 5 is now a completed zigzag which has overshot the 1-3 trend line, which is very common for contracting diagonals, and the overshoot corresponds to a volume spike at its end. So that all looks absolutely typical. The only thing which isn't typical of this contracting diagonal is its fourth wave and second wave are shallower than second and fourth waves of diagonals usually are, and I think that is because it's finding support at these aqua, or the upper of the aqua trend lines, just a bit above it. These trend lines are really important and could have forced the second and fourth wave to be a bit more shallower than they would otherwise be for the structure. The lower trend line began in October 2011, and it's drawn using a classic technical analysis approach, not an Elliott wave approach. It's reasonably shallow and repeatedly tested and very long-lasting, so it is extremely significant. I will not expect for the bull wave count to see an overshoot of that lower trend line by any more than 3% of market value. We do not have a high confirmed in place, although I think it's very likely. I'm using some points on the hourly chart for that confirmation. While there is no confirmation of a high in place, I will allow for the possibility of a little bit more upwards movement first, although today that looks very unlikely. But if it does happen, there's a maximum limit to this upward movement. Because the diagonal is contracting and the third wave is shorter than the first wave, the fifth wave may not be longer than equality with the third, because a core Elliott wave rule is a third wave may never be the shortest. The limit for the fifth wave is equality with 3 at 1973.72. Let's have a look at the end of minuet wave C, impulse on the hourly chart, where it begins down here, this point down here. We have classic technical divergence at the weekly chart level, a little bit for the end of this movement at the daily chart level, and we have some divergence at the hourly chart level. That all supports the idea of a reasonably sized trend change. For minuet wave C, we have 1, 2, 3, 4, 5 ending midway within the channel, pretty typical for the S&P's fifth waves. I'm using this channel as my very earliest indication of a trend change. I want to see a full hourly candlestick below this channel and not touching this lower trend line before I have any confidence at all that we have a high in place. Once we get that, I'll add an invalidation point up here and take away the maximum and expect, yes, we have a trend change. We'll have price confirmation of the trend change with movement below 1925.78. That's this point down here. At that stage, downwards movement may not be a second wave correction within the final fifth wave, and so at that point the final fifth wave must be over. Once we get that trend change, then I'll be focusing on what structure intermediate wave 2 may be, and I'll have initially an invalidation point up here, and we'll expect the first piece of downward movement must subdivide as a 5. When we have a nice clear 5-wave structure on the hourly chart, I will have further confidence in a trend change up here, so I'm expecting to see those 3 things this week. At the daily chart level, this is the bearish wave count, which expects that the correction was not over at the end of the credit crunch, that may have just been cycle wave A or possibly W of a combination. And this upwards movement is a B wave or possibly an X wave within a big expanded flat correction or possibly a combination. Either way, we need C or Y downwards to begin from this point. When the trend change is confirmed with those 3 things I'm looking for on the hourly chart, I'll have an invalidation point up here at the daily chart level for the bear wave count. Within cycle wave C, no second wave correction may move beyond the start of its first wave. For the bullish wave count, this big maroon channel, which I'm copying over from the weekly chart, is drawn as a base channel around its primary waves 1 and 2. For the bearish wave count, the maroon channel is a corrective channel drawn around cycle wave B. When the channel drawn around the zigzag of cycle wave B is breached, we'll have trend channel confirmation that the zigzag for cycle B is over, and the next wave, cycle wave C downwards, would then be underway. If we see a full weekly candlestick below this maroon trend line and not touching it, I will expect we have trend channel confirmation of a cycle degree trend change. This would be my main wave count. I would expect the market could be crashing, and I would calculate targets for downward movement for you. It's extremely premature to call such a trend change yet. We need this trend line clearly breached first. I'll always assume that the trend remains the same until proven otherwise. That's all for me today with your S&P analysis, and I hope that all our members had a fabulous weekend.